The Rebel Capitalist Show.
We're imperfect creatures in an imperfect world. Therefore, we cannot expect perfect money to behave perfectly.
Agreed.
And on that note, I go back to fractional reserve banking. And I've done a lot of thinking on this, and I thought, okay, well, what if we would have had Bitcoin then? Okay, so we wouldn't have had a need to put our Bitcoin into the bank. Therefore, they wouldn't have had fees or a need for fees. Therefore, they most likely would not have created additional IOUs, or we'll call it currency units, based on that gold or that Bitcoin. But then I go to a different thought process and say, okay, well, if you've got your Bitcoin, let's say it's at a level where it's not appreciating by 10% per day, and it's a little more flat, and people are going to want to make a return, I would assume, on their Bitcoin, and then it's going to end up in the hands of a fiduciary. Now, I totally agree that it's going to be far more decentralized if we get to that point, but it's still in the hands of a fiduciary that will try to maximize a return. And they might be able to maximize that return by creating those same type of IOUs, in addition, as loans, as an example, that are backed by the Bitcoin. And I think, okay, well, some people that own Bitcoin would not want their Bitcoin to be lent out under those terms. They would say, okay, I prefer the full reserve system that Mises talked about. But I think a lot of people, especially the average Joe that really didn't understand the whole history of it, would say, yeah, for sure, I'll take the 7% return over the 3% return any day of the week, or I'll take that with a demand deposit, or the other one you've got a time deposit, what have you. And then we kind of start going down the path of fractional reserve banking, or fractional reserve system, let's call it that, where we are creating technically more supply of Bitcoin, not the underlying asset, but IOUs that can be traded for goods and services, therefore potentially have the value of that Bitcoin go down to a degree in relation to those goods and services. So what are your thoughts on that? Am I totally crazy? Is there something there that I don't understand about Bitcoin, or what are your thoughts?
I think it's a great point, and we're back to let's start with this. So with gold itself, we're very accustomed to thinking in the fiat paradigm that we need yield on everything, right? And yield implies risk, lending, etc.
Right.
But gold itself, if you're holding physical gold, you can think of that, or hard money in general, as that you've got a bearer asset, so you have no counterparty risk. You're effectively holding a non-counterparty index fund on global productivity, or global equities, if you will, because so long as that money remains relatively scarce to the collective output of goods and services in the world, then your purchasing power is increasing year over year, right?
Going back to the 1800s, right?
Exactly. So that's the attractiveness of money, is that you have pure optionality on the aggregate productivity of the world. And if you're holding that money yourself, you have it's risk less, or risk minimized, trust minimized, whatever you want to call it. The problem with gold, as we covered, like, it's expensive to secure, it's risky to hold physical gold, someone can break in and take it, et cetera, et cetera. So there is an economic incentive to trust the warehouse operator to not only increase the transactability of your gold, but also to increase the security, give you peace of mind, et cetera.
Right.
But then you need to trust the warehouse operator, right? So what would this look like in a Bitcoin world? Clearly, self-custodying Bitcoin is much easier, right? It's just information. You can store it yourself, whatever. But with that power comes great responsibility. If you lose your private key, or you send Bitcoin to the wrong address, you make any of these irreversible mistakes, there is no one to call. You cannot call the big bank of Bitcoin and have them change your password.
Right.
It
No
happen.
customer service.
Exactly. It is digital gold. It's a true digital bearer asset. If you screw up, it's on you. That is very intimidating to a lot of people. So I agree with you that there will still be banks in Bitcoin. Many people would prefer to abdicate that responsibility to a party or parties so that they can just have their comfortable experience of calling my guy, moving my money, whatever it may be. But Bitcoin, too, is interesting in that the custody around it is very unique. So there's something that's scarcely touched on today, but I think is going to be a really big deal in Bitcoin called collaborative custody. So you can actually take the private key that is your Bitcoin, chop it into multiple pieces, and store each piece with a different custodian, or perhaps you hold a couple of the pieces, or your wife, or your lawyer, or your accountant, whatever. You can create these custom security schemas and key quorums, such that, say you chopped it into 5 pieces, you need 3 of 5 to come together on these set terms that you've created to move funds. So this, and I think it's going to take a while, but I think the institutional world will move this way. That instead of just trusting Fidelity or JP Morgan, that will actually be trusting a quorum of asset custodians, because this enables custody without counterparty risk, or minimize counterparty risk. Like you would need, instead of just needing to trust one management group, you would actually need, you could trust that these 3 management groups won't collude to steal your funds. So you get more value for less risk, essentially. So I think that's one thing. The market will move that way. The other thing that we touched on earlier is that Bitcoin enables this cryptographic certainty. So even if I trust just one custodian, if I trusted them with my gold, they're just giving me a sheet of paper that says how much gold they have on deposit. I don't actually go and physically inspect the gold.
Right.
But with Bitcoin, there are tools that you can audit their supply. You can gain cryptographic certainty that they have the Bitcoin that they say they have. If they're holding 10 of your Bitcoin, they can prove that. They can prove it every 10 minutes. So we've radically enhanced the auditability of the custody function in Bitcoin, even if you're using a centralized custodian model. And then you can do the same thing with collaborative custody, et cetera. But that still means, as we said earlier, again, banks were warehousing money, but they were issuing fiduciary media on top of that, which is essentially unbacked media of exchange. I think that's still possible in a Bitcoin standard. I think free banks will do that, but if we consider too that all these costs associated with fulfilling a banking function on a gold standard are much smaller on a Bitcoin standard for the reasons we've laid out, right? The bank is just more productive using these cryptographic tools. I would expect the positive correlation between the amount of fiduciary media issued and the cost structure of the bank, that should be much smaller. So I think debt overall will be a much smaller component of the world economy, and you'll have much smaller, I don't know how much, but it will be much smaller than the 350% debt to GDP pure fiduciary media world we're in today. It'll be more like 5% maybe of the money supply. The other point here that's very different than gold is that by customers having the option to withdraw their funds in full at any time or switch to another custodian instantly, right, with this digital money, this keeps banks very honest, and they can't gain the same level of government insulation as they have in the past, where governments would suspend payments, right? They would just cancel or close the gold window if there was a run on the bank, or that would, in theory, be much less enforceable or possible on a Bitcoin standard. And if you consider, too, these collaborative custody arrangements we've laid out, it may not be enforceable at all. If you're holding, the bank's holding a few keys, you're holding a few keys, you're sort of halfway trusting the bank, but if things do get dodgy, you've got enough of a key quorum to withdraw your funds even against their will. This keeps banks honest. If they know that their customers have, what is it? I was talking to Sailor the other day. He was saying that everyone in Miami Beach a lot of people carry guns in Miami Beach, and this tends to make people really polite because you never know who's packing, right? So,
Like Texas.
a bank is going to treat you really nice if they know you're holding the gun of you can fully withdraw your funds at any time and switch to a competitor, right? That's what a free market is based on, is that it forces businesses to be accountable to the preferences of their customer, because there's always the threat of competitive withdrawal or movement to a competitor. So I think you'll see more of that, in that banks will be treating their customers better because that option to move, the capital mobility is so high that it will force banks to be deliver a high level of customer satisfaction.